Gross monthly income. 5 key criteria for determining. Often most people are more concerned about their net income, take-home pay, than their gross monthly income, total. Most earners are oblivious that their gross monthly pay holds valuable information that benefits them in their financial journey. It not only guarantees financial organization, but also takes care of planning and other stuff, like seeking financial aids and benefits. This article will show the relevance of gross income and 5 criteria for determining it. What is gross monthly income? Gross income is the total amount you earn before any deductions, things like taxes, health insurance, retirement plans, and other forms of deductions from your salary before your final take-home pay constitute your net pay. In other words, your net income comes after all necessary deductions and withholdings, but the overall sum per month you earn before those deductions and withholdings is your gross income. What should be tallied as gross income? The total amount of money received over a specific time period is known as the gross income. This covers wages from a job, bonuses, commissions, side jobs, freelancing, or any other source of income, such Social Security. This may also apply to dividend payments, interest income, and capital gains, depending on the situation. You won't have to take taxes into account when determining your gross income. Since gross income is entirely pre-tax, taxes will not be taken into account in the calculation. The significance of being aware of your monthly gross income. Knowing how much money comes in the door each month is crucial. If you're trying to create a budget, apply for a home or vehicle loan, or both, most lenders will want to know your income in order to assess your likelihood of being a trustworthy borrower. Determining the amount to save for retirement might also be aided by knowing your gross monthly income. Knowing where you stand from a gross income perspective can help you make an informed decision about how much to contribute to your retirement account each month. Your net worth is also very significant. Net income can be thought of as the spendable money that really enters your bank or savings account each month. Since your normal after-tax spending, both fixed and discretionary, will come from your net income. Net income can also be helpful in creating a monthly budget. Unfortunately, you don't receive the whole $75,000 in usable cash when you're quoted a wage. Knowing your net income can help you create a more solid budget and enable you to maintain control of your finances, because a sizable portion of the money is allocated to taxes and set deductions. Why is determining gross monthly income important? Because your gross income includes all payments due to you, including allowances, bonuses, overtime, commissions, etc. As a result, it becomes essential to understand why you should have an idea of your monthly gross income to better monitor your finances. Perhaps you might want to undertake huge financial projects, say, buy a house or a car, or start your establishment. The information from your gross monthly income is what makes you credit-worthy if you decide to apply for a loan or qualify for a grant. If you are just a salary earner, this information will also make you more financially intelligent to begin to make better and smarter financial decisions when it comes to money. Whether it's a mortgage, the regular payment for a new cell phone, or a loan, anyone granting credit wants reassurance that you'll be able to meet your responsibility. They will examine your credit score to see whether you are a good risk or not. However, a credit score won't reveal your lenders generally prefer that your total monthly debt payments, including your mortgage and other loans due, not exceed 36% of your gross monthly income and 28% of your gross monthly income, respectively. While some lenders might be ready to go beyond such restrictions, they might do so at a higher interest rate. This is one reason it would be a good idea to pay off other bills before applying for a mortgage, such as credit card debt and auto loans. Even if you don't intend to apply for a loan anytime soon, knowing your gross monthly income might be useful, because it can reveal the state of your finances. Comparison of gross and net monthly income. After federal and state income taxes, Social Security, Medicare, health insurance, and retirement contributions have been deducted, your net monthly income is the amount really in your pocket or bank account. If your paycheck is your only source of income, your net monthly income is the sum that your company actually deposits into your bank account each month. Who should determine gross monthly income? Contrary to popular opinion, Determining gross income is not just for accountants and employers alone. In recent times, more people are interested in taking charge of their finances. Employees and individuals now more than ever need to know all that is involved with having to determine their monthly gross income. 5 criteria for determining gross monthly income. Quite a few factors are considered when determining gross monthly income. However, in the United States, not all factors stand out as notable criteria for the determination. Here are 5 criteria for determining monthly gross income, especially in the United States. 1. Wages form the fundamental determinant. Wages are the earnings due to workers for their services. They depend on the nature of work or the agreement at the time of hire. Your wages may be paid to you every month or weekly basis. Also, some establishments or employers prefer to pay by the hour. Regardless, your wages provide the basic determinant for your gross monthly pay. Most of the time, your starting salary devoid of deductions is your gross pay and is usually contained in your offer letter. Similarly, you can also identify your gross pay on your pay stubs or paycheck. 2. Additional compensation. If your job requires you to provide extra services like working overtime, the added compensation for all overtime services for the month also goes into your gross pay. However, criteria for overtime compensation vary according to state laws. 3. Income from multiple jobs. Multiple jobs earnings become a criterion for this determination for those who work in more than one place. It also involves adding up all earnings, including extra compensations due to overtime, bonuses, tips, etc. 4. Business revenue. Income from business revenue is usually for those people who are self-employed and have their businesses. All profit from selling company products also forms a part of the criterion for this determination, but is unique to a business. 5. Rent and royalties. Whether or not you have a job, if you also own a house or property with which you can allow rights to a person for a specific period, the money paid to you as rent becomes a criterion for determining your monthly gross income, in addition to that of your salary. How Paystubnow helps with tracking your gross income. Your gross income is not just valuable information to an employer, but also you as a tool for more organized finances. While you earn according to the period of payment of your employer or business profit generation, your expenses are more random in occurrence. Therefore, information about your monthly gross income helps you keep track of how much you earn, especially by tracking your paychecks and pay stubs. Other things you can do with Paystubnow are generating invoices and employee 1099. Facts. What is gross income? It is the total earnings that accrue to you before deductions like taxation, etc. For the salaried earner, it is their starting salary on their offer letters and paychecks. How to calculate gross monthly income. Calculating gross income differs for everyone according to your means of earning. Essentially, it is all financial benefits from your means before deductions and withholdings. If yours is gross annual pay, then you will have to divide your total earnings by 12 months or 52 weeks for a weekly earner. What is the difference between gross monthly income and net monthly income? Net monthly income is otherwise known as your take-home, as it is your earning after taxes and other deductions or withholdings. Conversely, gross income is the total earning you get before any deduction or withholding.